I'm going to go slightly bullish in the short term. And again, this is a swing trade, but look at the support here. You have support here and going all the way back to here. You should get some sort of technical kind of relaxation or a little bit of a bounce off of this level. Now, this isn't a long-term bullish call by any stretch. This is more of just over the next few days to the next week. I think we do see a little bit of a bounce in cryptocurrency.
Gareth Soloway, a renowned financial expert and trader, has established himself as a leading authority in the cryptocurrency world through his incisive analysis of Bitcoin. Soloway's bullish stance on Bitcoin is widely recognized as he underscores its potential as a long-term investment opportunity. Soloway believes that Bitcoin's decentralized nature and limited supply make it an extremely valuable asset, especially in times of economic uncertainty. Gareth, who has previously called Bitcoin's fall to $20,000, stated that the asset was likely to drop to a high-end target of $13,000 or a low-end target of $9,000. Soloway believes that we are about a year and a half into this bear market. This stagnation implies perhaps a year and a half of stagnation before Bitcoin shoots up to the moon again. The world's leading cryptocurrency, with the highest market capitalization, continued to surge and broke through the $26,000 barrier briefly, before consolidating back to the $25,500 range on Tuesday. Trading volumes reached their highest level since the FTX crash, indicating significant investor interest. To stay up to date with our latest content, please click on the subscribe button below.
It is. That's basically, if you go back to November when we started to hear about FTX collapsing, that was the FTX collapse. And then what I love about this is it shows how the beginning of a collapse turns out to be the resistance point on the way back up. So we came back up in this beautiful surge. We kind of hammered on it multiple days, finally breaking through, retracing again to that level, and then retracing again to that level here for really the second time on the way down. Now, the one thing I will say is that you have to look at the difference between the macro strength of a trend line and the micro. So what's more powerful? Is the trend line more powerful now, or was it more powerful the last time we hit? And the answer is it's less powerful now. It would be what I would call a minor trend line. So minor versus major. It was major here because it had just broken through and it was retesting that breakout. Now it's hitting again. It's becoming a little bit weaker. So in general, minor trend lines, what you expect is for a small bounce before a breakdown. That's exactly what I'm expecting here. It is, and I've gone on record saying that we haven't put in the lows on Bitcoin yet. I still think we're headed to 12 to 13,000, maybe as low as 9,000. And I think the culprit of that is going to be a recession in the global economy that basically makes people not want to hold stocks. By default, crypto is going to get caught up in that initially. So I do think that there is more downside, and I think that that is the likely scenario. And notice how long that took on that chart that you're showing. It took a long time. So part of it is going to be that it's dribbling down, but it's also going to just kind of break investors' willpower. And that's the normal kind of scenario here for what happens with stocks and charts in general.
After the downfall of Silicon Valley Bank, the Dow Jones Industrial Average and the S&P 500 have both experienced declines in their values. This event had a negative impact on the stock market indices. Soloway believes that downward pressure on the S&P 500 index is expected to ease by the end of 2023. As a result, the index is predicted to reach around 4,300 points, which is approximately 350 points higher than its previous closing position. This forecast provides a positive outlook for investors who may consider this as an opportunity to capitalize on potential gains in the market.
S&P 500 is showing, and you can see I have basically just two trend lines on my chart here. That's all you need right now. What you're watching for is which way does this wedge pattern break. So this is a classic wedge pattern in technical analysis. Notice we're hammering on the lower end. We're right there now. My guess is you're going to get a little bit of a bounce up, and then you're going to roll over and break to the downside. That break probably coincides with the bigger break to the downside we just talked about on Bitcoin, where we could head to about 18,000 and change. Now, if I'm wrong and we rally back up and we touch this 4160 level and we break above, now you're in the case for another leg up on the S&P 500. I don't think we test the all-time highs, but I think we could easily trade up, at minimum back to about 4,300. But right now, I am favoring a small bounce both in Bitcoin as well as the S&P, and then a bigger rollover maybe a week from now or so.
In the lead up to the March meeting of the Federal Reserve, traders were anticipating a 50 basis point hike in the benchmark Fed funds rate. Despite inflation decreasing, it still falls short of the Fed's 2% target. However, Gareth Soloway suggests that the Fed is unlikely to raise rates rapidly, as this could lead to a market sell-off and hamper economic growth. The U.S. dollar had been exhibiting bullish momentum, but it has since shifted, with bears now in control. Gareth Soloway discussed that the Fed may need to raise interest rates to curb inflation, but it will need to balance this against potential negative effects on the economy. Although inflation has been moderating in recent months, the process of getting inflation back down to 2% has a long way to go and is likely to be bumpy. The latest economic data have come in stronger than expected, suggesting that the ultimate interest rate level is likely to be higher than previously anticipated, Powell told the Senate Banking Committee.
Markets want weak data, so the Fed doesn't have to raise as much, right? So that's what we're seeing here. We saw that weaker data. It's causing the dollar to drop. That's telling us that the Fed is just ever so slightly less likely to raise interest rates in the future for the next few meetings. Again, they're still going to likely raise 25 to 50 basis points on the 22nd, but it's what are they doing after that? And right now, the weakness in the dollar is good for the market. Even if inflation's coming down, interest rates are going to remain high until the economy really cracks and I'm forced to lower rates, which again, for me, I'm looking at a multi-year recession, although I don't think it's going to be a depression. It's going to be a multi-year kind of crappy market, crappy economy. And that's going to basically be not so bad that the Fed has to cut rates significantly, but again, not enough to bring down inflation below the 2% mandate.
According to Soloway's predictions, he believes that Bitcoin and stocks will experience a significant price increase in 2023. That's all about Today Analysis. What do you think of Gareth Soloway's predictions for Bitcoin and other cryptocurrencies' performance in 2023? Do you agree with his market outlook? Share your thoughts in the comments section below. If you found this information helpful, please consider giving this video a thumbs up and subscribe to our channel. We look forward to bringing you more updates in the future.